So where we left off in our last conversation, Dave, was the statistic that I said shocked me, that in the process of sale or transition of the business owner could lose up to 50% of the value in their business. So how does that happen, and what can we do to prevent it?
Yeah, great question, Adam. So we suggest starting exit planning really 3 to 5 years in advance. 5 years is ideal, especially if you're going to look at things like entity selection. So for C Corp, for instance, choosing to be an S Corp 5 years in advance is a vital thing that you want to look
Right.
at. Many owners that don't address that or don't know to address that are going to cost themselves a lot of extra tax in the long run. There's also the opportunity to place really put in some effective strategies and creative strategies around tax planning on the backside to prevent getting just blasted by taxes that they didn't see coming. And all of a sudden, a $5 million transaction, the owner walks away with 2.5,
Yeah.
which
Wow.
is devastating.
Well, we've certainly seen some of those. And what's interesting too, you mentioned starting this planning process before, and I know I've run across business owners like, well, I'm not ready to sell yet. And while you may not be, right, but at some point you likely will, or maybe you're forced to sell either for a variety of reasons. Maybe, unfortunately, it's because you die prematurely. And I think we've actually seen where that can be a mess of where the business will transfer, right, after death. So just having a plan, even if, and I think, again, I'd love to get your thoughts, but just having a plan doesn't necessarily mean that you've got a finite period of when you want to sell. It's the fact that you can begin to control a lot of uncertainty that may or may not occur and be in a good spot, ultimately have a lot more peace of mind if some of those uncontrollable factors take place.
That's exactly right. Yeah. Just because you have a plan doesn't mean you're leaving your company. Doesn't mean you have to sell your company or anything like that. It means that you've got options. You're maximizing the number of options that are possible for you when you want to exit, leaving it to who you want to leave it to, and getting the money that you need out of it. Those are the keys. And, having that plan in place really uncovers a bunch of things that most owners just aren't thinking of. They're busy operating their companies, working in their businesses to build wealth and to keep employees functioning and obviously being paid. So there are things out there that no owner can keep track of and really know in advance until they meet with someone who does this for a living.
Right.
It's just not possible.
Well, and I think surround yourself with a team too. I mean, that's one thing that we're so big on is that we all can't be all things to all people, right? And so we've got various expertise and focus points, and ultimately it's all about, I believe, and again, the clients that we work for, and I know just in talking with you, it's how can we avoid being reactionary and be more proactive and plan, because it's usually never the things that we worry about that happen. It's the things that we don't think about that seem to sneak up and are kind of those blind spots. And by having a team and what you do and the work that you do is obviously helps to plan for that.
Absolutely. That's one of the things that really intrigued me about you guys at Prevail Innovative Wealth Strategies, is that you guys offer some amazing solutions to avoid or minimize taxation. And as an owner considers that transaction and the amount of money they're going to need to successfully retire and finish well, that's a really important factor. So I'm really excited and grateful to be working with you guys and partnering with you on things like this.
No, that's great. Well, I appreciate that. We'll get into some of those next time.
Sounds good.
Thanks, Dave.
Thank you.